All right, let's talk about fintech because something big is happening right now. For the longest time, it felt like the rules were pretty simple: grow, 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 and worry about the profits later. Well, that's all changing. We're seeing this massive shift where investors are basically saying, okay, we're done waiting.
And I love this quote because it perfectly nails the bizarre mood of the market right now. How does that even happen? You post record numbers, your best quarter ever, and your stock drops? It sounds completely backward, right? But here's the thing, it's not. It's actually a huge clue about what Wall Street really values today. So let's break that down.
Yeah, the bottom line is this: Wall Street's patience has officially run out. That whole growth at any cost mantra that defined fintech for years, it's toast, gone. Investors aren't just throwing money at cool ideas anymore. They want to see maturity, they want to see discipline, and, an actual believable plan for the future. So, to really get a handle on this new reality, we're going to look at three companies. And they're all super different, which is what makes this so interesting. We've got Robinhood, the classic disruptor. Then there's Upstart, the AI lending specialist. And finally, Fiserv, the big established giant. Each of their recent earnings reports tells us a piece of this much bigger story.
Okay, first up, Robinhood. This is probably the perfect example of that weird paradox we just talked about. On the surface, things looked great. They had a record quarter, but the market just shrugged. So what gives? Why wasn't a record good enough?
And you can see the conflict right here, plain as day. In the good news column, everything looks fantastic, right? Highest revenue ever, they beat earnings estimates, more people are using the app. I mean, what's not to love? But then you look at the other side, and that's where the story falls apart. Crypto revenue was way down, and because of that, their total revenue actually missed what Wall Street was hoping for. And that one detail, that's what tanked the stock.
And this is so important for understanding the new vibe. The problem wasn't a lack of activity. People were definitely trading. The problem was what they were trading. See, for Robinhood, crypto has always been this huge part of their narrative, their identity. So when that specific engine starts to sputter, it makes the whole car look unreliable, even if the other parts are working just fine. Now, it wasn't all bad news. There was this one really interesting data point: a big jump in their paid Robinhood Gold subscribers. And that's a huge deal because it points toward a future built on stable, predictable subscription money. And trust me, that's exactly the kind of boring, reliable stuff investors are dying to see right now. This quote just nails it, doesn't it? A movie with strong box office but bad reviews. It's perfect. Yeah, people showed up, they bought the tickets, but the movie itself was just kind of meh. And Wall Street right now, well, they're the toughest critics in town. So what's the lesson from the Robinhood story? It's pretty simple, really. If crypto sneezes, Robinhood still gets a major cold. They're just too tied to that roller coaster. And until they can prove they can thrive without it, they're going to be stuck on that ride.
Okay, so that's Robinhood, struggling to prove its quality. But now let's flip the script and look at Upstart, because their story is the complete opposite. It's not about disappointment, it's a real comeback story, a total plot twist. It's pretty rare for a single earnings report to totally change how people feel about a company. But that's exactly what Upstart did. I mean, these guys got absolutely crushed when interest rates started climbing. A lot of people were writing them off. But this quarter, they showed everyone they might just have a second act. So how'd they pull it off? Well, they basically threw out their old playbook. Instead of just chasing massive growth at all costs, they got back to basics. They started working more closely with their bank partners, they kept fewer of the risky loans on their own books, and, this is the big one, they put all their energy into proving that their AI model actually works, that it's credible. And guess what? The market ate it up. The whole conversation around Upstart shifted completely. It wasn't about, wow, look at this explosive growth anymore. It was about, hey, look, this is a mature, reliable business. And that right there tells you everything you need to know about today's market. Credibility, that's the new currency. I mean, how great is this line? If Robinhood is still fighting its adolescence, Upstart looks like it just graduated therapy. It's just so sharp, right? It really gets at the core difference. Robinhood feels like it's still trying to be the cool kid, while Upstart seems like it's figured itself out and is comfortable in its own skin. And that's the big takeaway for Upstart. When you're dealing with something as serious as lending, being flashy just doesn't cut it. You have to prove you can be trusted. Performance beats hype every single time.
Upstart showed everyone that a little discipline is a real game changer. All right, that brings us to our third and final company, Fiserv. Now, this is a totally different kind of story. This isn't about a young company trying to grow up or a comeback kid. This is about the big guy, the established incumbent, and the problems that come with being on top. So, Fiserv's quarter, it wasn't bad. Not by a long shot. I mean, this company is an absolute monster in the payments world. Super profitable. But the results were just fine. Kind of boring. And right now, fine is the new bad. Investors were looking for some momentum, some spark, and it just wasn't there. This is what we're calling the incumbent's dilemma. You've got merchant activity slowing down a bit. You've got tons of competition from scrappy upstarts. And that competition is putting real pressure on how much they can charge. The thing is, when you're as massive as Pfizer, even a little hiccup, a small slowdown, it feels like a really big deal. This legacy artist analogy is just perfect. Think about it. Fiserv is like a legendary rock band. They've got a huge back catalog of hits. They can still sell out any stadium in the world, but are they making the most exciting new music? Is all the buzz around them? Nah, that's moved on to the newer acts. And that's really the core lesson from Fiserv's story. Being huge is great for protecting your profits. It makes you a fortress. But it doesn't mean you're exciting. Scale keeps you safe, but it doesn't necessarily keep you in the spotlight. Okay, so we've looked at Robinhood, Upstart, and Fiserv. 3 totally different companies, 3 totally different stories. So what does it all mean when you put them together? Well, they actually paint a really clear picture of the new rules of the game in Fintech. This really sums it all up, doesn't it? From Robinhood, we learned that having a crowd isn't enough. You need a quality show. From Upstart, we learned that being disciplined is what actually pays off now. And from Fiserv, we got a reminder that even if you're the king, you can't just expect to keep growing forever without a fight. And all of this leaves us with one really big question to chew on. For so long, the defining word in Fintech was disruption. It was all about breaking things and moving fast. But now, as the industry grows up and Wall Street is watching with a much more critical eye, you have to wonder, is discipline the new disruption? From the looks of it, the market's answer is a pretty clear yes.